Hello everyone and welcome back to my channel. My name is Evelyn, and if you're new here, please subscribe. Today's video is about my cash portfolio. I want to share how I have structured my cash portfolio, and hopefully at the end of this video we'll have a conversation on what you guys are also doing in terms of structuring a cash portfolio. So disclaimer, like any other video in my channel, on my channel about personal finance, this is not financial advice. My aim is to start a conversation so that we all learn from each other. Well, how do I feel about cash? First of all, how do I feel about cash? I've got three things that I wrote down. My notes are here. Firstly, I think the cash is boring. It's boring to acquire, it takes time, but it is very necessary to have. It's not a nice feeling to not have cash. And secondly, cash allows you the freedom to avoid debt. So if you've got a stash of cash and you have to attend to something very quickly, and you don't really have money in your normal current account, then you can access your cash and you don't have to borrow from the banks or anything like that. The third point is that cash allows you to have time for other assets to grow. For example, if you have an emergency to attend to or a big purchase to make, you don't have to sell your shares, for example, or your ETFs or any other assets that you may have. So those are the three things that I feel whenever I think about cash. Yes, it's boring, but it's got its own advantages. Now, with cash, there are two risks in my opinion, or the two risks that I always think about. One is making sure that I keep the value of my cash, so I need to earn above inflation. And two, I need to make sure that I don't earn 23,800 in a tax year, because once you earn above that, you're going to pay tax. So guys, I have 4 accounts in which I keep my cash, and I'm going to tell you about them. The first one is the money market account, which I have with an asset manager. The reason I went with the money market account is that the money market account exposes my cash to higher returns as compared to a bank. So the emergency fund is calculated, or the target of the emergency fund is calculated by saying what are my monthly expenses, total monthly expenses, times 3 or 6 months. That is a lot of money. So because of that, I need that money to earn above inflation. I need the value of that money to be preserved. Also, you don't know when you're going to have an emergency, so you need to make sure that whatever you earn can keep up with inflation. So that is why I have my money in a money market account. A money market account follows an index, unlike a bank interest, or a bank account. They will tell you that you earn 4% or 6% in good times. But with a money market account at an asset manager, you follow an index. The index always tries to outperform inflation. So that is how I make sure that that stash of money is preserved and the value of it is preserved. So the other 3 accounts, I earn very little interest, and it's also to manage. The reason why I would have 3 other accounts where I would earn very little interest is to make sure that overall the cash portfolio does not earn 23,800 in interest. I'm avoiding tax risk. The second account where I have cash is my home loan. I have an investment property wherein the access loan facility allows me to have additional cash, which reduces the capital amount that I have to pay back, and as a result will reduce the interest that I pay on the loan. So I do not earn interest on that. The reason I have that account is that it helps, like I said, to manage the interest repayments or the interest expense in the loan, and then it's also an emergency fund for the investment property. So if my tenant calls and says there's a leaking pipe, that's my problem, and I need to fix it immediately. So having access to that cash will make sure that I can meet that obligation and keep the tenant happy. Third account is the 32 days notice account with my bank. So it's not a great account. I think right now the percentage that I get on interest is about 2%, probably less. It serves one purpose, and that's to help me to plan for my car expenses. I drive a German sedan, very lovely German sedan, but it's expensive to maintain after service warranties and guarantees and all of those wonderful things that happened in the first 5 years. It's about 9 years old now. So what I do is I know that I'm going to pay for service out of my own pocket. I know I'm going to need tires. I know I'm going to replace light bulbs and many other things. So what I do is I have allocated a portion of my money to save into that account. It's a sinking fund, which means at any time of the year I will need to withdraw from it to meet whatever expense that arises with my car. So yeah, that's the purpose of it. I do not need to earn a lot of money in terms of interest on that account. I don't. And I don't need this money to generate more interest elsewhere. I just need it to be there, to be accessible, and to help me to plan for expenses that I know are coming. So the fourth account is my account that I call an account for niceties. So my account for niceties is held at a different bank. It's just a pure savings account, very simple, very cheap. That account is cheap. So I have it there, and it also doesn't earn a lot of money in terms of interest. I think right now, in fact, I'm sure that the money that I earn is between 2.5% and 3%. So I'm very happy with that because I'm managing the overall interest earning story of my cash. So it's very, very low. So it doesn't matter. And also it's also a sinking fund, because when I say niceties, I mean things like if I want to get a nice designer bag or a piece of fine jewelry, or I want to buy something for my hobby. I've got very not so cheap hobbies. So that account is for that main reason. I just put money in there knowing that one day, in fact not one day, I know what I want, and it's not things that I can buy with one swipe in a month. So I need to plan for those things. So that's my account. So those are my 4 accounts: my emergency fund, my prepaid debt in my home loan for my property, for my investment property, my cash for the car expenses such as service, tires, etc. and so forth, and then my cash for nice things, because I like nice things and I don't want to deprive myself. So those are the 4 accounts. Now there's a 5th one that I sort of stumbled across. It wasn't really part of the plan, but I have it. In my Fed Group Impact Farming account, I have not spent the money that has been coming into that account for the last 3 months. So why have I not done that? It's because I'm waiting for certain assets to be available. For example, your beehives and solar panels, they cost a lot of money and I can't just buy them without planning for them. So the income, as it comes, it stays in that account. I do not withdraw it, and I'll wait until it's available. So that is what I call cash for speculation, because I'm waiting for an opportunity to arise, and so that I can take the opportunity. And I think overall the cash for speculation is one thing that I do not have, because sometimes you want to buy certain shares in a company and you don't have the money because you've invested maybe at the beginning of the month, and now you see an opportunity coming. Maybe one of your favorite companies has gone down in terms of the share price and you don't have the money to take advantage of that situation. So I do recognize that I want and need a fund for speculation. I think the best way to keep that fund would be in the specific accounts where I want to take opportunities. For example, in the Fed Group Impact Farming wallet, that's where I will wait for the opportunity for other assets to be available. And maybe on my Easy Equities account I can do that as well. Just keep cash on reserve so that when the opportunity arises, I can do that. I can take those opportunities. But yeah, that requires a lot of planning. It requires chopping and changing a lot of things. But yeah, that's where I want to move to. Thank you so much for watching this video. If you liked it, please press the like button and leave a comment. Tell me what you think about my cash structure. Tell me what you have in your cash portfolio. How are you managing everything? And what ideas can we share? So that we can all learn from each other and grow. Remember, if you are new, please click the subscribe button and press the notifications bell so that you can know every time I upload. Thank you so much for watching, guys. Bye.